Bitcoin miners consider hashrate derivatives as BTC price rises. Bitcoin mining, hashrate. As Bitcoin mining faces rising costs and competition, miners are turning to hashrate derivatives for risk management and financial stability. Experts weigh in on this evolving trend in the industry. Last updated, February 4, 2025 at 01:45 GMT+2. Reporter, Rachel Wolfson. About author. Rachel Wolfson has been covering the cryptocurrency, blockchain, and Web3 sector since 2017. She has written for Forbes and Cointelegraph and is the host and founder of Web3 Deep Dive podcast. Author profile. Share. Copied. Last updated, February 4, 2025 at 01:45 GMT+2. Why Trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Add disclosure: we believe in full transparency with our readers. Some of our content includes affiliate links, and we may earn a commission through these partnerships. Read more. Cryptocurrency asset manager Grayscale recently stated that the Bitcoin mining industry is essential for maintaining the Bitcoin network's transparency and long-term security. Although miners play a critical role in the growth of Bitcoin, a lot of risk and operational expenses are involved. Purchasing mining hardware and acquiring land for facilities is expensive. Miners also struggle to maintain revenue due to the volatility of Bitcoin, BTC. Hashrate derivative products gain interest. Bitcoin miners today are therefore exploring new ways to ensure that their operations remain profitable. One of these ways is through the financialization of Bitcoin mining hashrate. Andy Fajar-Handika, CEO of Loka Mining, told Cryptonews that hashrate derivatives allow Bitcoin miners to hedge against fluctuations in mining revenue by locking in a fixed price for their future hashrate. This means that miners can secure predictable cash flows regardless of Bitcoin's price volatility or changes in network difficulty, Fajar-Handika said. How miners can sell future hashrate. For example, Loka Protocol is a platform that enables Bitcoin miners to sell their future hashrate in the form of tokenized mining contracts. Fajar-Handika explained that these contracts function similarly to commodity futures in traditional markets. Just like corn farmers hedge against crop price fluctuations, Bitcoin miners can sell hashrate contracts upfront to secure capital while investors gain exposure to mining rewards without operating hardware, he said. This concept reduces risk for both parties, while making mining financing more accessible. Ryan Condren, CEO of Titan.io, told Cryptonews that hash power marketplace Lumaren offers a decentralized ecosystem for miners to sell off their hash power for up to 7 days in the future. Bitcoin mining hash power can then be traded by Lumaren users on-chain. Aaron Foster, Director of Business Development at Luxor Technology, told Cryptonews that Luxor also offers a non-deliverable forward, NDF, product that allows miners to take a position on hash price. This lets miners effectively lock in 1 to 12-month revenue certainty for their mining operations. This product is also available to non-miners as well, Foster said. Miners are naturally long Bitcoin hash price, so taking a position and locking in a price to create revenue certainty makes sense. Foster believes that hashrate derivatives will likely extend the lifetime of mining operations by reducing exposure to short-term downturns. Bitcoin mining hashrate derivatives critical with rising Bitcoin price. It's also interesting to point out that as the price of Bitcoin rises, hashrate derivatives are becoming more important. Fajar-Handika explained that as more miners enter the market, the Bitcoin network faces increasing difficulty. This makes it harder for existing miners to maintain profitability. Hashrate derivatives provide upfront liquidity that allows Bitcoin miners to buy new hardware and expand operations, he said. Financializing hashrate may also reduce the need for miners to sell off their BTC over time. Instead of selling mined Bitcoin at lower prices to cover operational costs, miners can use forward hashrate contracts to secure capital without giving up their BTC holdings, Fajar-Handika remarked. Echoing this, Foster noted that miners who hedge their exposure to hash price volatility as a percentage of their operational costs will lock in longer-term profit margins before a depressed hash price market develops. These instruments allow miners to hedge against hash price volatility, making mining more predictable and financing easier, he commented. Hashrate derivative products gain traction. While hashrate derivatives have been a known concept for a few years, industry experts believe that this is finally catching on for both Bitcoin miners and institutions. Speaking about the topic at the North American Blockchain Summit NABS, in November last year, Condren stated, "This is very much the next stage in this market for evolution and maturity. The financialization of hash power needs to be treated more as a commodity than a hobby." Foster, who was also on the derivatives panel at NABS, further remarked that institutions want to buy Hashrate to get exposure to this asset class. He explained that this is why Luxor created its NDF product. "We created that product to service the institutional side to allow them access to the product without having to go through the hurdles of setting up on the physical side," he said. Luxor's end-of-year summary report for 2024 notes that its Hashrate derivative product witnessed exponential growth. The report states that last year Luxor's Hashrate derivatives were used by public and private miners, prop trading funds, financiers, market makers, hosting providers, Hashrate marketplaces, and ASIC brokers. On the business side, we onboard 30 new clients into our markets and traded $65 million in notional USD, settling about 1.2 EH per day on average, the report states. It's further documented that interest from miners and traditional finance communities reached a record high at the end of 2024. As a result, Luxor has continued to expand its product offering by increasing its tenures to 12 months in duration. The company also recently launched Hashrate exchange-traded futures. Additionally, last week Grayscale announced the launch of a new exchange-traded fund ETF, offering exposure to Bitcoin mining. Known as Grayscale Bitcoin Miners ETF, MNRS. The fund specifically invests in companies that comprise the INX Bitcoin Miners Index. This is a proprietary index designed to measure the performance of global Bitcoin mining companies that generate the majority of their revenue from Bitcoin mining or mining-related hardware, software, services, and projects. Key hurdles for miners and institutions. While hashrate derivatives are becoming more popular, challenges may prevent some miners and institutions from using these products. Fajar Handika pointed out that this is likely due to a lack of education around these offerings. Many miners are unfamiliar with these products and may hesitate to use them, he said. Liquidity concerns also remain, as Fajar Handika noted that investors must be willing to buy hashrate contracts. But if demand is low, pricing may not be favorable for miners. Moreover, decentralized derivative solutions, like the product offering from Loca Protocol, are subject to smart contract risks. Yet while challenges remain, Condren believes that all miners will eventually start to sell their hash power. This may be to a global hash power grid or mining pool. Countries, banks, and large corporations will bid against each other to buy up the hash power in order to mine blocks and process transactions on the BTC network, he said. Condren added that while hashrate derivatives may be a less sexy part of the ecosystem, miners need to start hedging strategies to generate predictable revenue regardless of market volatility. This will help stabilize the entire ecosystem as Bitcoin continues to become part of the world's core economic architecture, he said. Follow us on Google News. Trending news. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Trump tariff stir crypto sell-off, with Ether tumbling over 26%. What's happening in crypto today? Daily Crypto News Digest. Japanese Finance Minister. Tokyo will review crypto tax system. By June, India reconsiders crypto policy amid global adoption shifts. Report. Blockchain News. Moscow plans to turn Russian Far East into crypto mining hub. 22 hours ago. By Tim Alper. DeFi News. Uniswap enables permissionless bridging across 9 networks with a cross protocol. October 24, 2024. By Hassan Shitu. Bitcoin News. U.S. spot Bitcoin ETF see $5 billion inflows in January. Could surpass $50 billion in 2024. Bitwise CIO. 17 hours ago. By Ruhalaman Hakanas. Blockchain News. Thailand's SEC to launch blockchain-based trading platform for digital tokens. 16 hours ago. By Ruhalaman Hakanas.